Yeah, we continue to be buying tech. I mean, our playbook the last 18 months, anytime we get, whether it's 10-year spike fears, any sort of COVID variant, second wave, you buy the winners in tech. I think we're still in the middle innings of a tech bull cycle. Going 2022, we have a NASDAQ 19,000 target. And I think you look at names like Apple, Microsoft across cloud, cybersecurity. These are the times to own these names. And then as your earlier guest talked about, ultimately, it is a tailwind for tech. In our view, it's a semi-remote environment that's here to stay. And this is just another reminder. It's a green light here, in our opinion, to buy these tech stocks.
What if we go back to a period where tech gets hit because anything that's considered highly valued gets hit on rising rates? If the Fed does do a faster taper, if this variant does not prove to be as worthy of economic concern, if it holds up against the vaccines, for instance, then what? If you're in that kind of environment, then tech is not so popular.
Well, I think that's why you need a barbell approach. Right? When you look at names, even like a Microsoft, which I view as sort of a safety blanket name in this environment, there's obviously, of course, higher risk names, a DocuSign, a Zscaler, and others. But it's a fourth industrial revolution playing out right now. I mean, we're going to have 3 to 4 trillion of tech spend over the coming years. And what's happening now, it's just getting accelerated in this environment. So you look at cybersecurity, cloud, and of course, Apple. I mean, we've just done our Black Friday checks. It's showing right now that Apple's probably going to sell about 10 million iPhones over Black Friday weekend. That would be a record. And I think it just speaks to our view of tech going into next year.
Dan, you mentioned, the Apple check, people trying to handicap what holiday is going to look like for Apple, given the fact that maybe they have longer lead times, not going to be able to deliver as many products. Do you think the market has been fixated on that? And I keep asking, is it in the stock? I mean, you can talk about Apple stock and say it's really held its value very well. It's got all this stability. But from September 1st of 2020 to now, it's only up about half as much as the market is.
Yeah, chip shortage clearly hitting Apple, and they were clearly conservative in terms of their forecast for the holiday quarter. But I think this is ultimately going to be a clear beat in terms of where we're heading. They could be upwards of 85 million units for the year. I think supply shortages have been alleviated a bit. And the demand right now that we're seeing, I mean, this is a company that looks to be selling about 40 million iPhones between Black Friday and Christmas time. If that happens, this is a stock that's ultimately going toward $3 trillion, as we go into the next 3 to 6 months.
Yeah, I just wanted to pick up on the chip shortage, Dan, because we already know there are travel restrictions here, and we're going to see different countries react differently to this new COVID variant. We were already on the brink of some lockdowns in Europe because of the Delta variant. What does all that mean for the supply chain, which is already so strained and causing so much pressure for some of these companies?
Well, right now, that's the biggest risk over tech in terms of the chip shortage, which is definitely alleviating going into what I view as the first half of 22. But I think that becomes a bigger fear if this really impacts the supply chain and elongates that in 2022 for auto and tech. But right now, I believe the bark's worse than the bite. In terms of what we're seeing, not just on names like Apple, but even names on the auto side like Tesla and GM, where we're starting to see that moderate. And this is clearly going to be a bit of a risk-off day. But I think we look back on today as another golden buying opportunity to own the winners in tech.